Okay, if you can hear me, please type in the chat and just tell me you can hear me. Oh, good. That's good.
Loud and clear.
Great, great. Fantastic. Okay, we're about to go live in a few minutes. I love your background. Looks great. Looks really good.
Thank you.
Okay, and I think we're live. Hello, this is George Markowski and Michael Downey coming to you live in the Positive Property Group. Hello and welcome. If you're watching this live, type in hashtag live. If you're watching the replay, type in replay. Hi, Michael.
Hi, George. Hi, everyone.
Hello. This is Michael, who I want to introduce to you. Michael has just joined the team at Golden Key, and he's going to be helping our clients succeed with finance. So I was going to do a quick intro. Then what I want to do is talk about the world economy, what's happening at the moment, because a lot of people are worried. Lots been happening in the stock market and crypto and everything else like that. So I'm going to get to that and talk about how it's going to affect the market and what's happening. And then we're going to go into our private group, and we're going to be doing a Q&A when it comes to finance, interest rates, and everything else like that. Yeah, so it's really exciting to have you join our team, Michael. You've had nearly a decade experience when it comes to finance, and you've worked with one of the oldest banks in Australia. So you're well-versed, and at one stage you were managing 16 brokers, is that right?
That's right, yeah. So 16 brokers across 3 states, an offshore team of up to 50 people based in the Philippines, Nepal, India, and oddly enough, one from Peru.
Yeah, so the company you worked with was probably one of the biggest finance companies in Australia, I'd say.
They are there. They claim to be the biggest property advisory company in the country.
Yep.
Many of our members have probably heard of them.
Yep.
I won't name names.
We will in the secret group. I'm happy to share it with our people, but yes. Yeah. So yeah, you're coming from one of the biggest finance companies in Australia. It's pretty exciting that you joined us, which is great, because I think your level of experience is really going to help. And you've been with us for the last few weeks, and I've already noticed some of the amazing things that you've been doing for people, which is great.
Yeah, look, I'm a firm believer that when it comes to property mortgages, nothing is ever a straight up no. There is always something we can do,
Yep.
even if it doesn't look like we can.
Yeah, exactly. And I like your can-do attitude, because that's what it's about. Really, on the journey to property success, it's never a straight line. That's the fact of it. So
it's not.
Journey to property success is filled with pitfalls, and it's always a different way around. And the important thing is not to give up, but to keep going. Because if you quit, you're guaranteed to lose. That's the fact of it. But if you don't quit, you're more likely to succeed, especially if you've got the right team around you. Much more likely.
100%.
Yeah, so let's talk about what's happening in the world economy. Okay, so what's happening in the world economy at the moment? I suppose the stock market in Australia dropped 100 billion. The S&P 500 dropped. The Japanese stock market dropped. Cryptocurrencies dropped, and there's a bit of a panic. You know, on the news, you see big recession, depression, all this sort of stuff going on. So a lot of people are scared. And look, the media is there to scare you. That's the one thing. They're not here to inform you. And that's the big challenge. And I guess that's part of why being part of a group that can really center you and give you reality instead of fear porn that the media try to sell you is very important. So what does this mean for the economy? What does this mean for the world? And what does this mean? You know, because the headlines are saying this is the biggest drop since 2020, right? Now, what happened in 2020? We had the whole COVID pandemic, and we had a bit of an issue. And what happened was the stock market went down. But ultimately, we had a massive resurgence in the stock market. Not only that, we had a massive real estate boom and then a lot of inflation. Now, a lot of this was driven by what the reserve banks around the world were doing to combat this drop. Because when they had that drop, the World Bank said, okay, let's start printing money. And all the central banks went crazy and started printing money like crazy. And I warned people, this what they call this is quantitative easing. So what it does is, it's a fancy word saying if we print a lot of money, put it into circulation, it's going to ease everything out because it's going to blow everything back up. Because when you've got cash, it helps businesses, and then people get paid, and it helps the economy, and the money goes around. Did it work? It worked well. Worked too well, because now we've got had a lot of inflation and still have it, and partly because it's money printing. The other part was the supply chain from COVID slowing things down and pushing prices up for no apparent reason. So you had two things at the same time pushing it up. Now all the banks have put interest rates up, and what they're trying to do is put on the handbrake to stop inflation. That's what's happening. The interest rates going up. Now, the challenge is putting interest rates up also increases inflation, because it costs more money to get money. Then when a business borrows money, then they're paying more to get the money, so they need to charge more to pay the interest. So therefore, it expands and goes through. So as a tool, interest rates going up to ease inflation is a very blunt tool and does both. It's, slows down the economy, but also puts inflation up. So personally, I just think it's a stupid tool to use to reduce inflation. I don't like it, but the Reserve Bank, they love it. Now, the Australian Reserve Bank, we always have the highest interest rates out of the first world for some reason. We're always very, very conservative, fiscally and things like that. Now, the Reserve Bank recently got together. I think it was Monday, was it?
Tuesday.
Tuesday, yep. Tuesday, because the first Tuesday of every month. I should know that because it's normally Melbourne Cup in November and my birthday. So the Reserve Bank gets together for my birthday to decide. Funny enough, usually in November on my birthday, the Reserve Bank drops rates nearly every time, because Christmas is coming up and they want to stimulate the economy. So it's always a good birthday present. Rates going down for me, it's great. I don't think it happened last November. But anyway, they kept rates the same. They didn't put them up because they've been playing the idea and talking about putting rates up. I believe ultimately that we're going to see rate cuts. And I think USA are the ones that are going to lead the charge, and then we're going to follow. A lot of analysts are saying it's not going to happen to 2025 until we drop rates. What are your thoughts, Michael? What are your thoughts on that?
My thoughts are we can't really trust what the RBA are saying around their timeframes, simply because they don't want to give people hope. They don't want to pre-stimulate the economy. My thoughts are September will probably see another steady rate. October, November, we'll start to see drops. Now, we're not going to see drops the way that we saw hikes. They're not going to swing the other way, but they will start coming back down into 2025. And then in 2026, we should start to see a little bit more stability within the economy.
Mm-hmm. Yep, I think it's a fair assessment. And I think, look, what goes up must come down. And the one thing everyone has to realize, and this is the one thing people have to realize, because people get confused here. When interest rates drop and they're low, everyone thinks it's going to last forever. And I tell everyone, it's not going to last forever. They're going to have to go up again. When interest rates are high, they're going to have to go down again. It's just simple, basic maths. So whenever things are good, they're going to go down. When they're down, they're going to go up. And that's just the way it is. And it's a bit like, winter follows summer and summer follows winter, and that's the way it goes. And there's cycles. There's always going to be cycles. When the market's really hot, sooner or later, it's not going to be hot. And when it's flat, it's going to go up again. And it's all a matter of working with these cycles and not being surprised when they change. So I think, interest rate cuts are definitely on the way happening. Now, what's going to happen to the economy now that we've had this massive drop And I want to just show people a few charts that I Googled recently. I'm going to share my screen. Okay, here we go. I Googled Bitcoin, and this is the 1 year chart. And recently Bitcoin had a massive drop. And you can see here, one Bitcoin here, and then it's dropped here quite significantly. But if we compare this to the beginning of the year and go back to the beginning of the year, it's way above where it was. Then let's look at the S&P 500. S&P 500, these are the top 500 companies in America. And what they say is the S&P 500 is indication of the whole stock market as a whole. Now, funny enough, the S&P 500 is more like a S&P 10 because the top 10 tech stocks have got most of that. And if you look at what's happened here, the stock market, we had a drop. Now it's going back up. But if you compare it to the beginning of the year, it's still much higher. So that's the fact of it. Can it go down more? It could. And this is one of the reasons why, a lot of people have been moving their superannuation and creating self-managed super and using it to buy property because they don't want their nest egg to drop 20% out of the blue, because that's not going to happen to property. That's the thing. And that's another reason why it's really good to, get self-managed super, get a property if you can afford it. And that way you can balance out your portfolio, not have everything in the stock market. On a good note, look at the medal count for Australia at the moment. United States, 27, Republic of China, 25, and look at Australia, 18 gold medals. Now, I must say, I'm very proud to be Australian with such a tally. You think about this, America's got 350 million people. China's got 1 billion people. And us with 26 million are kicking their ass. Like, as a nation, we really punch above our weight in many ways. So I'm very proud to be Australian and what we're doing in the Olympics. It's great. It's good to see. I don't know who's been watching the Olympics. I've been watching the Olympics on Stan. It's been fantastic. Been some really interesting stuff happening. Apparently, there's an American polo guy that punched one of the Australians in the face too and got disqualified.
Good. Disqualify the Americans. More medals for Australia.
Exactly. So what I'm saying is, don't get caught up by the media. Don't get scared about the media because, things go up and down. And when it comes to investing is more of a long-term thing. It's not about worrying about what happened yesterday or today. It's what's going to happen over the next 10 years. You need to have a long horizon when it comes to investing in order to do it safely and in the smart way. And blips shouldn't have to worry that much. And the thing is, I think the supply and demand of property at the moment, property is looking very strong and very good in Australia. I would find it very improbable for us to have a dip. I didn't say impossible because I would never count anything impossible, because the fact of it is, with property, what happens is it goes up consistently for a while, then you have a little correction, and then it goes up again. And over a 10-year period, you're going to have a correction in that 10-year period for 2 or 3 years. And then you're going to have a flat curve, and then you're going to have a hike. And we haven't had a correction for a while. I don't think it's due yet, but also what we're going to look at is where the correction is going to happen. So if we look back at 2008, and this is a classic example, because 2008 was the GFC, and that's when we had our last massive recession, the global financial crisis. It was massive. That was the biggest crisis since the recession back in 1920s. That's how bad it was. And if you look at 2008, what happened in Australia is the blue chip properties that were worth 6, 7, 8 million, they dropped dramatically. Units and high rises dropped. What happened to houses and townhouses? Hardly anything, because people still needed somewhere to live. And the people on our program, back in 2008, they didn't lose any money because they're in the top 100. They actually made money. And then everyone after 2008 was despondent, going, oh, property stuff, it's never going to go up again. And I was saying to people, now's the time to buy. And the people that bought in 2009 did really well. And then we had COVID. And once again, a lot of people were scared. And I said to our members, keep buying, because you keep buying consistently, because you balance it out. The people that bought during COVID, they did tremendously well out of property, really, really well. And I really believe that the people that buy the smart way now are going to do very, very well. You know, I've no doubt, and I'm certain that the next 5 to 10 years, there's going to be more property millionaires made out of property than the last 100 years. It's a big call, but I can see the demand supply ratio. I can see the immigration. I can see the rental crisis not going to get better at all. It's going to get worse, in fact. Nick, the RBA one-trick ponies. Nick said the RBA are one-trick ponies. Interest rates is there only lever? If GST was lifted to 15%, that would sort inflation out. Yeah, maybe. So there you go. So what we're going to do now is we've done our live thing. Thank you very much for watching. Now we're going to go into the private group.